TV worth watching. Iowa Public Television. Presentation of the Nightly Business Report is made possible in part by a grant from Piper Jaffray and Hopwood Incorporated, with offices in the Quad Cities, Ames, Waterloo, Des Moines, Mason City, Sioux City, and Storm Lake.
This is the Nightly Business Report, made possible by the Digital Equipment Corporation, with its new generation of VAX family computers, connecting headquarters, branch offices, production and research centers into a single integrated computing environment. Digital has it now. By Kidder Peabody, for over 120 years, one of the world's leading investment firms, serving the financial needs of individuals, corporations, and governments. Kidder Peabody, professionalism worldwide. And public television stations across the nation.
Good evening, everyone. One man, one vote has long been the law in the United States, and for companies listed on the New York Stock Exchange, the rule is one share, one vote. But the exchanges plan to drop that rule to allow companies to develop better anti-takeover defenses drew strong opposition today at a hearing of the Securities and Exchange Commission. Washington correspondent Bob Friedman reports.
Corporate raids like those launched by T. Boone Pickens have caused some companies to want to issue non-voting stock to consolidate power within management. But for the last 60 years, the New York Stock Exchange has adhered to the one share, one vote rule, which prohibited the issuance of non-voting stock. But now the New York Stock Exchange wants to drop one share, one vote, fearing a migration of companies to other exchanges with weaker voting rules.
One of the following steps should be taken. Promptly develop and implement rules requiring all issuers of a size to qualify for trading in a national market system to comply with one share, one vote requirements, or approve our proposed modification in current listing standards.
Phelan says he prefers all exchanges follow one share, one vote, but competition has the exchanges looking over their shoulders.
I hope that you won't allow either the New York Exchange or us to move to the bottom, and that you will motivate us to get together and raise our standards.
NASD's Gordon Macklin says of all the companies in NASDAQ, the ones that would be Amex eligible are the biggest users of dual voting stock.
If you see their 10 or 11% split voting right ratio to our 5% ratio, maybe we ought to redefine what bottom is if you say these companies are evil.
Meanwhile, Pickens is pressing the SEC to keep the New York Stock Exchange's present one share, one vote rule.
Somebody said, what would you do if an offer was made for Mesa Petroleum? I said the offer goes directly to stockholders. Stockholders own the company, managements are employees. We would not spend a dime to keep an offer away from stockholders.
The Commission does not seem to be leaning in any direction yet and may develop a hybrid of all the plans.
We're not endorsing any solution. We're exploring all of the alternatives. There's no solution on the table that doesn't have something the matter with it. And we want to explore the downsides of all the options as well as the upsides.
These hearings will continue tomorrow, but because of the complexity of the issue, commissioners say it may take several months to come up with a ruling. In Washington, Bob Friedman for the Nightly Business Report.
Construction of new homes fell to a two-year low in November as housing starts dropped 1.8% from their October levels to an annual rate of just below 1.6 million units. Geographically, the decline was concentrated in the South as slumps in the farming and oil industries took their toll. Construction of apartment buildings also fell, reflecting high rental vacancy rates and changes in the tax laws. But in a bright spot, building permits issued in November rose by 1.7% for the first increase since June.
Well, in other economic news, the Federal Reserve Board reports that the nation's industries put more of their facilities online last month as they used 79.3% of their capacity. That's up 0.3% higher than the October level. But on the trade front, the numbers continue to be bleak. As the bottom line measure of U.S. trade, the current account deficit widened to a record $36.3 billion during the third quarter. Paul?
On the heels of yesterday's rebound on Wall Street, which erased a midday loss of some 17 points on the Dow and turned it into a closing gain of 10.5 points, traders were impressed enough on today's opening to bid stocks up nicely as the industrial average rose nearly 6.5 points by 10 a.m., with gainers taking an early 5-3 lead over losers. The upturn faded during the midday hours as those traders, still fearful of what this Friday's triple witching hour will bring, lightened their positions, while others kept a defensive stance while awaiting any word on Donald Reagan's Iran scam testimony in closed hearings today. At noon, the Dow was down just over 2.25 points, and losing stocks took a 7-6 lead over gainers. The market bobbed and weaved its way along in a narrow range in mid-afternoon, but as future spreads turned positive in the final hour, heavy program trading emerged to send the Dow Industrial Average hustling to a closing gain of 13.35 at 1936.16, and believe it or not, that is the fourth highest closing level ever. Theoretical high of the day, almost to 1943, the low down around 1912. Trading volume today moved up about 9 million shares. Up volume exceeded down volume by better than twice. Transport's up nearly 3.25 points, almost a 2.5-point advance in the utilities. That's a big move percentage-wise. Dow 65 up just over 5 points, and the closing tick a strong plus 765. Standard & Poor's 500 was up 1.83, almost a 2-point gain in the 400. The 100 up 1.75 and then some. The SPOC 250 was up 0.73. New York Stock Exchange Index exactly a 1-point advance. NASDAQ gained nearly a half-point. Value Line just over a point gain, and the Wilshire 5,000 up just over 15 points. News of the 1.8% drop in November housing starts got bonds off to a higher start today, and bickering between Iran and Iraq over production quotas at the OPEC meeting in Geneva helped sustain modest gains right on to the close. And then so did a 1987 economic forecast from Solomon Brothers, which predicted the Federal Reserve would maintain a very accommodating credit policy. Long-term treasuries coming in with a gain of 8/32. GMAC corporates up 3/8 of a point, and the bond index gained 0.21, and a 3/8 point gain in the Jacksonville municipals. Finally, Fed funds moving up a little bit higher than we've seen in recent times, but around 6.5%. I'll be back shortly to show you where the action was on Wall Street today.
On the precious metals markets today, gold, platinum, and silver all posted moderate losses, with platinum falling $6 to $487.70 the ounce. On the New York currency markets, the dollar finished mostly higher, closing up against the yen and Swiss franc, and while the Canadian dollar rose marginally against the greenback, the British pound eased. And oil prices were moderately lower in New York and London.
As Paul noted, a dispute between Iraq and Iran over oil production quotas continues to block an agreement at the OPEC oil ministers' meeting in Geneva. Saudi Arabia's new oil minister, Hisham Nasser, today met with his Iranian counterpart in an attempt to break the deadlock, telling reporters that Saudi Arabia is prepared to cut its own oil production. Meanwhile, Saudi King Fahd today fired the head of his state-owned oil company Petromin, giving no explanation.
Manville Corporation has been operating under Chapter 11 of the bankruptcy laws since 1982. The former asbestos producer took that step because of potential liabilities it faced from lawsuits filed by victims of asbestos contamination. Now, Manville is trying to emerge from Chapter 11 status, but at a very high cost to the firm's shareholders, as New York correspondent Neil Cavuto reports.
Manville officials were back at the very bankruptcy court in which they first filed for Chapter 11 some 4.5 years ago. But this time they had a reorganization plan, what's proven to be a very controversial reorganization plan.
And we view it basically as totally extinguishing, terminating all interests of the present 20,000 common shareholders of Manville.
Shareholder lawyers like Richard Lieb walked out of today's hearing, claiming the reorganization plan devastates his clients. Under the plan, common shareholders stand to see their ownership diluted to as little as 2.2% and maybe less. Manville creditors fare better. They're likely to recoup more than half the $475 million owed them before bankruptcy. The rest will be paid over the next 4.5 years. Meanwhile, asbestos health claimants would benefit from a massive trust fund, which could eventually total $2.5 billion over the next 20 to 25 years. And that pleases asbestos claimant Jim Vermeulen, who says he has a lot more at stake than any shareholder.
I put blood before money. An investor is not dying of an asbestos disease, and I suggest they look for investment somewhere else.
Manville attorney Herb Edelman acknowledged at today's hearing shareholders will be hurt under reorganization, but that in the end, the company had few other choices. Bankruptcy specialist Martin Klein says that argument could be precedent-making.
This is what it's going to do. It's going to set a precedent for the companies really to put much of the onus and the burden on the shareholders, as opposed even to management, for example.
Most legal experts say that even if the court rules in Manville's favor and approves its reorganization, the actual consummation of that reorganization could take years, especially in light of shareholder appeals, which seem almost inevitable. In that case, the 4.5-year-old struggle to get Manville back on its feet could be delayed indefinitely. In New York, Neil Kavuta for the Nightly Business Report.
Salomon Brothers chief economist Henry Kaufman sees lower interest rates ahead. In his annual Outlook for the Financial Markets address, Kaufman said credit demands next year will be easily met because a drop in consumer spending and business investment will coincide with a rise in foreign capital coming into this country. He said that will allow the Federal Reserve to loosen its credit reins.
In the United States, monetary policy will be the only stimulative force, while the combination of very moderate monetary and fiscal expansion in other key industrial countries will be an insufficient contributor to strong global growth. The monetary expansion in the United States will continue to encourage consumption, but for the time being will not spark a recovery in capital outlays.
Kaufman says long-term interest rates will be the first to decline, with long-term Treasury bonds dropping to the 6.5% range by mid-year. And Kaufman said while economic growth and inflation should pick up in the year's second half, the Fed will not move to push interest rates higher. Paul?
All in all, pretty cheery stuff coming from Dr. Doom. Let's have a look at the closing Dow. We see that might have helped that 13 1/3 point closing gain. That is the fourth highest close on record for the Dow at that 1936 level. Advances led declines by about a 9-to-7 ratio, but quite a few more new lows than new highs for the year. Topping the active list on just over 3 million shares, Pan American World Airways dropping 3/8 of a point. A word apparently trickled down on the street that Morgan Stanley late last week put out a downgrading of Pan Am. American Telephone was unchanged today. Fannie Mae moved up 2 5/8 in a very positively inclined interest-sensitive sector of the market. USX gained 3/4 of a point. IBM was up 7/8, participating in the rally. Commonwealth Edison gained 1/4 of a point. General Electric reviving on the upside, up 2 1/8. Exxon gained 3/8, second day in a row at a new all-time closing high for Exxon. Mobil was unchanged. Coca-Cola, 10th in big board volume, moved up a point. Look at these utilities go. The regional Bells. Atlantic up 1 1/4. Bell South rising 1 3/8. DuPont gained 1 3/8. Federal Express was down 2 1/4 just after the close. Federal Express reported lower second quarter earnings, 66 cents versus $1.01 last year. General Mills, on the other hand, reported a 33% rise in its second quarter earnings. The stock up 2 points. Gillette up 1 1/8 and continuing positive reaction to a buy recommendation from Goldman Sachs yesterday. Lear Ziegler fell 1 3/8. AFG Partners has now officially withdrawn its $85 a share takeover bid. Hitachi, representing a strong group of Japanese stocks today, up 4 1/8. The Tokyo Exchange had a big rally. First City Bancorp of Texas up 1 1/4. That's in response, a sympathetic move to the fact that Chemical bid for another Texas bank, bank shares yesterday. Texas Commerce Bank shares, I should say. Extra moved up 1.5 points on the news that ITEL owns 7.6% and may seek control. CTS, a 1 3/4 point gain on the news that AVX wants to buy it out for $35 worth of its stock for each CTS share. Rykoff Sexton's up 1.5 points. The Drexel Burnham brokerage put out a buy recommendation there. Pennzoil down 2 7/8. There's some anticipation of an adverse ruling against Pennzoil from the Texas Appeals Court. That is expected within a few weeks in the Texaco case, of course. Over in the American Exchange, a gain of 0.57 in the index. Trading volume was up about 700,000 shares from yesterday's pace, but a few more losers than gainers. Mixed close there. Taiwan Fund, the most active issue on the American. It went public, initial public offering of the Taiwan Fund today. The offering price was $12 even, so it moved up smartly, 1 3/4 from the IPO price. Wix Companies lost 1/8. Lorimar Telepictures still smarting from a downgrading by Oppenheimer yesterday, off 5/8. Wang Labs edged up 1/8, and Imperial Oil lost 1/4. Resorts International B up 4 points. The story here, Pratt Hotels says it'll take all the stock that's offered to it on its tender offer at $135. Centennial Group down 1 3/8. The news here is that company management said maybe investors are a little disturbed that they have deferred the shareholders meeting from December 10th to the 29th. NASDAQ trading, a gain of 0.44 in the index. Trading volume down about 3 million shares from yesterday's pace, and about 100 more losers and gainers. The 100 index off 0.83. Intergraph topped the active list, down 1 1/4. Accuray, after rising 12.5 yesterday after getting a $35 share tender offer from Combustion Engineering, off 3/4. Apple Computer up 3/4. Glaxo Holdings gained 3/8. Henley Group off 1/8. Intel gained 1/4. Genentech up 5/8. Tandem up 1 3/8. Beecham Group gained a 32nd, and Apollo Computer up a point. Dry Clean USA, another initial public offering today that was offered at a price of $11.50, so it moved up 1.25. Walbro received a sizable contract from a Japanese firm for its fuel pumps, up 1 1/4. ISC Systems, however, tumbled 2 points. The company says it's going to have lower than expected second quarter earnings. Finally, in the spotlight, 2 more Texas banks. Interstate says it wants to merge with Republic Bank. Well, my street critique guest tonight is Mr. James Engle, Vice President of Wood, Struthers & Winthrop and the manager of the Pine Street Mutual Fund. Because Jim closely follows stocks of financial services companies, I asked him if yesterday's buyout bid for Texas Commerce Bank shares by Chemical New York signals the beginning of a stampede by major money center banks to take over the host of depressed banks in the state of Texas.
Paul, you may see further acquisitions in the Texas market. However, we think that this is a risky game to be playing. It's a game of beat the clock. That is, you're in there trying to buy a stock before it's acquired by a New York bank, before the loan portfolio deteriorates to an extent that it's not attractive to anyone. We would suggest otherwise, that you find regional banks in other areas of the country.
Well, let me just interject one thing. I think Moody's is thinking about downgrading Chemical New York's debt. Is that because of the bad quality of the loan portfolios that Texas Commerce may have?
That's a contributing factor.
All right. You say there are greener fields elsewhere.
That's true. We think that you can find very good values in many regional banks. One is Manufacturers National, which is a regional bank in Detroit, which is selling at book value at 7 times next year's earnings and has a very high-quality loan portfolio. Another is Maryland National in Maryland, which is selling a little more expensive multiple at 9 times next year's earnings and 1.4 times book, but it is also cheap. We also think you should look at Florida National Banks of Florida, which is selling at a little bit above book, and they have already signed an agreement to be acquired by Chemical Bank at 1.5 times book.
So in essence, you're saying that there are much better deals elsewhere in the country and to basically steer away, if you'll pardon the expression, from the Texas banks.
That's true. One way you could play the regional bank takeover mania in a much more low-risk manner would be to invest in the shares of Pilgrim Bank Shares, which is a closed-end mutual fund that invests in regional banks.
All right. James Engle of Wood, Struthers & Winthrop, thanks very much for being with us.
Thank you, Paul.
That's our Wall Street wrap-up.
U.S. machine tool makers received a double dose of good news today. First, the White House announced that Japan and Taiwan have agreed to limit their exports of machine tools to the United States for the next 5 years. In addition, President Reagan said the Pentagon will soon begin aiding the domestic machine tool industry, primarily by helping manufacturers improve their technology. The administration says the export restraints by Japan and Taiwan should help the domestic industry raise its share of the U.S. market from 35% to 44%.
Currently, Japanese car exports to this country are limited by voluntary restraints imposed by the Japanese government and car makers. But bad times in the Japanese auto industry have led to a campaign for the dropping of those limits when they expire in the spring, as Tokyo correspondent Bob Cardin reports.
Nissan plans to move 5,000 workers out of the factory and into sales. Executives at the company have taken a 10% pay cut. And those company-financed nights out in Tokyo's swank saloons are a thing of the past. The enduring strength of the Japanese yen has taken a huge bite out of profits. Earnings at all auto companies here are down, and Nissan recently posted its first operating loss in more than 30 years. Prices of Japanese cars in the United States have only increased 10 to 15% in the past year, while the yen has increased more than 40% against the dollar. Companies can't turn to the domestic market for relief. Profits on car sales here are razor thin. Japanese automakers make most of their money on U.S. sales. New strategies are being formed for the American market.
Talking about the Japanese auto industry as a whole, we would certainly like to go upmarket in the United States and, introduce bigger and more comfortable cars.
In the meantime, car makers here are chopping costs. Jobs are being eliminated through attrition. Subcontractors are getting squeezed. The industry hopes its predicament might encourage the Japanese government to discontinue voluntary export restraints to the U.S. They are set to expire next March, even though automobiles should account for nearly 1/2 of America's expected $60 billion trade surplus with Japan in 1986. Sources here say because of the incoming Democratic majority in the Senate, the Japanese government is now leaning toward continuing auto restraints for at least one more year. And to prevent cars from becoming a trade issue, that decision could be announced as early as next month. In Zama, Japan, I'm Bob Cardin for the Nightly Business Report.
Coming up in tonight's Money File segment, one way to defer interest income into next year when tax rates go down.
The Conference Board says consumer confidence held virtually steady in November after declining gradually for more than a year. The board survey of more than 5,000 households nationwide showed that fewer than 1/4 rated business conditions as good, but only 9% expected those conditions to worsen in the next 6 months. The November survey also revealed that only 3% of Americans voiced plans to buy a home last month, down from 4% in October.
Union Carbide today filed a counterclaim against the Indian government, charging that government policies contributed to the Bhopal.
Revenue is flat. Compact disc revenue will equal LP revenue this year, and CD revenue forecasts are headed off the chart. Until this year, Sony had the only CD plant in the United States. Most CDs were made in Europe and Japan. But Warner Brothers has just opened a domestic CD plant. CBS is converting a record plant to CDs, and several independent companies are building plants. Worldwide production capacity is expected to go from 55 million units this year to 110 million next year. Experts warn CD plant construction is an expensive undertaking with considerable risk.
The industry has been pretty much capacity constrained. They can sell pretty much all they can make, and it's really difficult to gauge demand when you're selling everything you can make, because you don't know where you should stop building plants, and that's the perpetual problem in business.
There is another risk, new technology. There is a new format called digital audio tape. Like a cassette, a DAT machine can record and has the quality of a CD. A CD machine, like a record player, cannot record. The industry is concerned the DAT recorder will encourage the copying of pre-recorded material and will also impact the young CD market. The industry is asking Congress to require that DAT machines sold in the United States contain a circuit designed to prevent copying. While the machines are already on sale in Japan, their introduction here is at least 1 year away. In Chicago, Scott Gervey for the Nightly Business Report.
Income deferral has always been a popular year-end tax strategy, and with tax reform lowering tax rates in the coming year, it is an especially attractive option in 1986. In tonight's Money File segment, Ira Shapiro, Director of Tax Policy at the accounting firm of Coopers & Lybrand, suggests one way to defer interest income.
There is an opportunity for an investor with a significant cash holding to defer taxation on interest to be earned between now and the end of the year. This interest would ordinarily be taxable in 1986 at a 50% rate for those in the highest bracket, and the resulting tax is due in April 1987. On the other hand, if this interest is treated as earned in 1987, it will be taxed at 38.5%, and the tax will not be due until April 1988. If the investor takes the cash and obtains a bank certificate of deposit, which matures early next year, or buys a short-term U.S. Treasury bill, under the tax rules, all of the interest will be considered to be earned in 1987, including that portion that was actually earned during 1986. Thus, the interest will be taxed at the lower rate applicable to 1987, and the tax payment will be postponed for 12 months.
Recapping tonight's top stories, the New York Stock Exchange's plan to drop its one-share, one-vote rule comes under some fire before the Securities and Exchange Commission.
Stock prices don't drop on the New York Exchange today as heavy program trading helps send the Dow Industrial Average to better than a 13-point gain, closing at 1936.16.
Looking ahead to tomorrow, the government reveals final figures on the third quarter gross national product.
And that's it for this edition of the Nightly Business Report for Tuesday, December 16th.
For Linda, for Paul, and for all of us at the Nightly Business Report, good night.
The Nightly Business Report is made possible by Kidder Peabody. Our over 120 years of investment experience is an arch to build upon, serving the financial needs of individuals, corporations, and governments. Kidder Peabody, professionalism worldwide. By the Digital Equipment Corporation, with its new generation of VAX family computers, connecting headquarters, branch offices, production and research centers into a single integrated computing environment. Digital has it now. And public television stations across the nation. For a transcript of this program, please send $3 check or money order to NBR Transcripts, P.O. Box 12724, Overland Park, Kansas 66212. Please include the date of the broadcast.
The new tax law will affect us all. Thursday, join Louis Rukeyser and a panel of experts for an update on its major provisions and some investment suggestions. Watch Thursday at 7.
Presentation of the Nightly Business Report is made possible in part by a grant from Piper Jaffray and Hopwood Incorporated, with offices in the Quad Cities, Ames, Waterloo, Des Moines, Mason City, Sioux City, and Storm Lake.
This evening on Iowa Public Television.
Next on Nova. This is Marit Brandsma, a normal teenager except for one problem. Marit has a rare disease. In another time and place, her diagnosis would have meant deformity and certain exile. But today, Marit can expect a complete recovery. Finally, leprosy can be cured. That's next time on Nova.
For 40 years, we have built atomic weapons and generated nuclear power. It's left us with a legacy. 10,000 tons of the most radioactive substance on Earth. High-level nuclear waste. Temporary storage facilities are wearing out. Sooner or later, we must find a permanent way to dispose of it.
Before Stonewall tells the exciting and untold story of gay and lesbian life from the roaring 20s to the rebellious 60s.
And that next night, I was in a room with 12 other lesbians for the first time in my life, and oh, what a thrill that was.
I got a gal in Kalamazoo.
Homosexuality has always been a dirty word.
Tonight's TV worth celebrating includes Nova at 7, Nuclear Legacy at 8. At 9, The Eagle returns, and Before Stonewall at 9:30.
This is Pat Bodie. Bill Reichert says he was the University of Iowa's highest paid football player in 1951. His indictment of the game is on Touchstone Thursday night at 8:30.